Oh, another one reports. That's right, Aurora Cannabis reports here after hours, and the thing is up big. We're talking already being up 14.5 during the normal trading session, and then up another 14% after hours. So let's take a look at this and see what is going on with it. Naturally, one thing you can definitely think about is the fact that this week prior it was already down 36%, so might be a little bit of a makeup time because the other companies in the similar fields, as I should say, reported and they weren't so good. But Aurora here posted a quarter three GAAP EPS of a negative $1.37 Canadian, which missed by 60 cents. That is not good. But revenue of 75.5 million Canadian dollars, which beat by 28.5 million Canadian US dollars too. What did I just say? Canadian dollars, but definitely a big beat in terms of revenue for sure. So you see why the shares might have gone up was really based off that revenue number, but that EPS number is slightly concerning. We'll take a look at some of these though. So net revenue up 35% year over year. Canadian medical net revenue up 5% year over year only. But really the main story for this is going to be consumer net revenue up 23.9%. Pretty big there. And obviously you see as medical kind of moves out of the way and becomes less of a market than consumer will become. That is kind of where these companies shine. So non-GAAP EBITDA of a negative 550.9 million, I should say, which increased 36.5%. Aims to achieve positive EBITDA by in 2 quarters from now is what they're saying. But again, that is entirely subjective. We talk about I'm more of a fan of net loss, looking at net loss as opposed to what the company can adjust, because those numbers are a little bit fudgy, you know. So inventories you see are up 12.8%. Product cost per gram actually fell 3.4%, which means their margin should increase. Kilograms produced increased 17.8%, and kilograms sold increased 34%. Pretty big on that aspect. Let's look at this press release and see what they have to offer us. So they improved their cash position. We'll look at their balance sheet in just a little bit here and see what we have to offer. So here they talk about consumer revenue. We talked about that already. Gross margin was 44%, which is unchanged from the prior quarter of 44%. Nothing too crazy there. Their target is 50%. Greater than 50%, which they say they're on track for. Pretty exciting if you're into that. SG&A costs of 75.1 million. Their target is going to be only 40 million to 45 million, which they're on track of reducing that as well, because they were down 24 million from the previous quarter on that SG&A expenses too. So they're going to be planning on including the R&D, research and development expenses with SG&A. Reset plan target noted below. So that means technically they're trying to get their expenses down quite a bit more. Definitely something to consider there. Their adjusted EBITDA did improve 34.4 million from the prior quarter though, of 80.3 million. So good improvement there if we're talking about their metrics for profitability. Their goal is to be positive in the next 2 quarters. In the quarter ending in September, we'll see how that is. Definitely excited to see what that has for them. I don't know. It's going to be weird to look at. So what other highlights do we really have to look at? Let's see. Aurora has moved to reduce the complexity in its business operations through strategic divestitures, asset disposals, and subsidiary closures, with significant simplifications expected. So again, let's try to improve profitability. So events subsequent to the quarter end, you see that Aurora renewed its ATM program to enable the company to raise an additional 250 million US dollars pursuant to its outstanding base shelf prospectus date of May 14th, under which approximately 350 million US dollars is available. So they're trying to raise a lot of capital. Very scary. Aurora completed its previously announced plan to consolidate all of its outstanding common shares on the basis of 1 common share for every 12 common shares outstanding. Reverse splits are ugly. Ugly things for a company. Ugly things for a company. So don't like to see that when you're talking about this company as well. Oh gosh. Yeah, don't like to see that. I can tell you that right now. Let's look at the balance sheet, I guess. If they're going to provide it for me. Let's check a look. See if they'll show me it. Let's look at that press release. Are they going to show me it? I don't know if they're going to show me it. If they're not, well, we're going to be kind of upset with them, aren't we? So, they might be in their newsletter. I don't know. No, it's not. Apparently, they're hiding it from me. So, apparently, they don't want me to look at this balance sheet because maybe it's scary. Maybe it's not something they want me to see. Clearly, it isn't. So, that's one thing I need to know about this company. I know it's not a beautiful balance sheet on this company, and we talk about a company that had to resort to reverse split, raising capital of 500 million US dollars, 600 million really. I don't know. The question becomes, where's the value in a company like this? And in my perspective, I don't know if there necessarily is good value coming from this company. Company with a 60 or 52-week low of 66 cents. I just don't know where the value's at for this company. We saw it rise with the hype of the Mary Jane stocks previously. I just don't know where the value is here if they're raising capital so quickly. I don't know if there's really a good valuation for this company. Again, I wouldn't really get involved in any of these companies for many reasons. For one, you just don't know who's going to be the main winner out of this. Obviously, there's probably going to be a bunch of small winners. No one's going to be like the be-all, end-all monopoly for this kind of stuff. And there's going to be continuously people involved outside of it. One thing you need to know about this industry in particular, a lot of people still probably go and purchase their stuff. I'm going to be honest, they're not buying it at the government-run places. They're not going to be buying it at these dispensaries because the tax rates are ridiculous. And people can get stuff a lot cheaper when you're purchasing on the streets. I hate to say it, but it is a fact of life. You can get this kind of stuff a lot cheaper on the streets. Again, it's not legal that way, but then again, people will do what's cheaper for the most part if you're really into smoking a lot of it. Not everyone, but there is medical benefit for them, and they'll find some use. But I think a lot of their market's kind of cornered off because of the fact that taxes are so ridiculous on this stuff. I mean, it's ridiculous. Not a company I'm interested in getting involved into. I don't partake in the product, but I just don't know what the value really falls for this company. If you're invested in it, congrats to you. I'm just not going to get involved personally.